Hey YouTube, Mr. Angelo here, and today I'm going to talk about the number one questions that I found valuable answering in my first year of trading stocks. I think that these questions, um, they might help you build a framework to approach the stock market from, and I wish I would have been exposed to them sooner in my stock market journey. And so I hope you enjoy.
How to get started in the stock market. I've just typed out some of the thoughts that I've had after year one in the stocks. It's gone quite well. I've learned a lot and I've made a good amount of money for me. I'm up about 100%. Of course, a lot of that was timing the coronavirus collapse quite well. And so we'll see how the following years come. But I thought that these questions might help out someone else in my situation a year ago. And so let's get into it. The first thing I think is beneficial to answer and to explore for yourself is what actually are your beliefs about the stock market? And I found that it was helpful to start thinking about this from the very ground upwards. I wrote some ideas down here. So what exactly is money and where does it come from? And I think that this helps you because once you start realizing that money is um, a fiat currency printed by federal governments and backed by federal governments, you realize that you can have a quite um, substantial, sorry, I should say, you can have an abundance mindset because money is printed every day. Countries go into deficit every day. When you borrow money from the bank, they're taking someone else's money and lending it out to you for a profit. And because of this, it's almost like the money supply is infinite. The economy is not a zero sum game. What exactly is the point of money in your mind? Why are you going into the stock market? What do you want to do with money? Are you trying to create freedom for yourself? Are you trying to get a nice house or nice things? Are you trying to do a little bit of all of that? Are you trying to build inheritance for your children, etc.? I think once you get to the point um, of money for yourself, it's quite easy to then adopt the habits that you're going to need to build up your wealth. What are you hoping to achieve by participating in the stock market? And why stock market investing over other forms of investing? Do you have debt that you need to pay off? If so, is it going to be worth putting money into the stock market when you might not beat the interest rate you're paying on your debt? Is stock market investing right for you, or would you be better off investing in real estate or something else instead? I've done both. I do really love the stock market because it's quite hands off and it is well suited for my type of outlook and researching um, maybe capabilities or tendencies where I like going very deep into one company. And I've done some hands-on work with real estate. I did a real estate flip, but I found the process of stock market investing and the volatility and all that quite enjoyable. So yeah, explore your options. Here's one that I've seen come up in a lot of my friends and my family. And it's pretty illuminating in that a lot of people have assumptions about the stock market that aren't right. So here are some examples that you can think about. Um, can someone make money consistently in the stock market or is it a gamble? Like, do you really believe that you can participate in the market long term and be successful because of the knowledge and the skills that you implement? Or do you think that people who get rich in the stock market are essentially lucky gamblers? Do you really believe that you can be in a position where you've bought the next Apple or the next Tesla and you're going to hold it for 10 years and make, 10x, 5x or even 100x your money. Um, can you envision yourself being that type of investor? Do professionals really have an insurmountable advantage over us retail investors? And if so, why do you think that is? If you've decided on that conclusion. What are the advantages of being a retail investor? I know a lot of people, when you tell them that you invest in the stock market, they go, well, I don't have the time for that. I don't have the skills for that. I'm just going to give it to a professional. But is that really the best choice when you consider how much fees you're paying and how much information you have access to on the internet these days? Or might it be better to invest yourself, not have to pay any type of management fees, especially to large hedge funds where the fees are quite exorbitant, and also be able to manage your own risk reward and also know exactly where your money's going? I know that a lot of people say no one's going to care about your money as much as you do, and I found that to be true in my experience. Also, there are some advantages that come from being a retail investor, I found, which is that you can take bigger risks than you would be able to um, by investing with the professionals, meaning you can buy Tesla in the early stages when they're not profitable and they're just ramping. You can put half of your portfolio into your favorite highest conviction company. Um, and when you invest with the big institutions, you can't do that. You can't say, listen, put all of my money into Tesla. Maybe you can if you give them a call, but how most people invest just by buying mutual funds, that would never happen. You could never get the upside that is available in the stock market. How much, this is an obvious one. How much are you willing, such can you afford to lose? And are you willing to pay tuition in the markets by losing money while you learn? Um, this is one where there's gonna be a learning curve and you're likely gonna make some mistakes while you invest in the markets. And so I think it's helpful to go into it saying, like, listen, if I'm going to learn a new skill, there's going to be ups and downs and it's going to cost me some money. And so I don't, I'm going to define how much tuition I'm going to pay, like, let's say each year. Maybe you start with 5,000. Then as you grow more confident, you go to 10,000, 15,000, etc. Mm, I think that it's helpful. I think it's helpful to think about it like that. And it makes losing money feel like a lesson, which of course it is, but it's hard to manage the psychology when you're not very clear about your potential loss. Okay, so after you kind of think about those things, I think it's fairly helpful to start then learning about the structure of the market. And so like what exactly does the stock market provide to our society? What's the point of the system? It's interesting to answer this question for yourself because you quite quickly realize that the point of the system is to um, essentially allocate capital where it's needed. And then you start to think about where you think capital is going to be provided to in the future. For example, if you think smartphones, like let's say back in the day, you thought smartphones were the next big thing, you can bet that the market is going to catch on to that eventually. Today, it might be something like genomics or electric cars or whatever you decide it is. But yeah, yeah, think about what the point of the stock market is. It helps you to make um, decisions about the future and how it's flowing, how capital's flowing. Anyway, what advantage does what does participating in the stock market provide for your own financial situation? Like what can you benefit from learning about the stock market? Um, like what type of upside can you get? Can you change your situation financially? Are you more of a slow and steady guy? Do you already have a high income, or do you have a low income and you want to find ways to elevate your financial situation without maybe going back and doing huge amounts of university or taking on massive risks by maybe starting a company, et cetera, et cetera. Investing is a good way to change your financial situation. What exactly does it mean to own a stock? What are you entitled to as a shareholder? Do you really believe that owning a stock means you're now a business owner? And what type of businesses do you want to own? This is something that's interesting. It's like, are you gonna approach owning shares as if you're purchasing businesses? Are you going to purchase tobacco companies or oil and gas companies or things that maybe you're on the fence about their overall impact on the globe, or are you going to get involved in companies you truly believe in and that you have a feeling that they're providing genuine value and positivity to the world? Or do you just want to do it for the money? Do all you care about is dividends and owning a profitable business, and you really don't care what type of services they're providing? Um, yeah, it's helpful to view yourself as a business owner when you're holding a stock because it helps you hold the stock long term and kind of get out of the trading mindset. What is a bond? What's the difference between equities and bonds? Just that's an easy one. What's an index? What's the S&P 500, Nasdaq, and Dow Jones? How are they different and why are they important? And it's important to answer because once you figure out the indexes and how they influence the market and what they're actually telling you about the market, it becomes easier to build your own portfolios or to get a sense of the, I guess, overall sentiment that investors have in the marketplace. What's an ETF? What are the pros and cons of investing in ETFs? And are you going to invest in ETFs, individual stocks, or a mixture? This just comes down to figuring out. It's a little bit more like your risk reward, and and it's gonna help you decide whether you're gonna take a, I guess, like a broad approach to investing in the market. An ETF is essentially a clump of companies that when you buy into, you're buying a little piece of all of them. And so, do you want to buy a little piece of all of them? Do you want to buy your favorite companies? Do you want to take like a barbell approach to investing, they say, where you go, maybe half of your portfolio into one of your favorite companies, the other half into an ETF? ETFs are generally considered much more safe. Um, and then of course, you have to answer, how do you participate in the markets? What type of account are you going to use when you start investing? Are you going to do the self-directed style or put it into an RSP? I'm in Canada, so RSP, tax-free savings, or maybe like an IRA, I think they call it in the States, where you can shelter your growth, yeah, the growth on your capital from capital gains tax. And then what is leverage and margin? You'll be running into those terms a fair amount. Okay, now point number 3. I found this so helpful in my first year of investing, and I'll probably do a separate video on this in the future, but figuring out how to leverage the intelligence of the internet, finding online mentors, and trying to discover what investing philosophies resonate with you. Um, there's so many different investing philosophies out there right now, and it's interesting. The more you study about stocks and investing, the more you realize that everyone kind of has a different opinion and everyone has a different philosophy, but it all seems to work for them. Um, Often these philosophies are contradictory, like I write here, but they still work. Um, what really helped me was finding a bunch of different, I think of them kind of like online mentors where they're people I think are very intelligent and I respect them greatly. And I'll just like consume all of their content. So podcasts, YouTube videos, Twitters, books, blogs. I'll try to get a sense of how they think about the market. I'll try to figure out what type of axioms they're using to make their decisions. So, are they buying companies based solely on the financials and trying to find companies that are legitimately undervalued? Are they looking for the most innovative companies? Are they trying to figure out which company is gonna grow, it's maybe consumer based, like 10x over the next 10 years. And despite the fact they're not making very much money right now, they're trying to get in early before the institutional investors get in. So there's all sorts of different styles, portfolio allocation. Some people go, 50% value stocks, 15% growth. Some people go dividend stocks, growth stocks, value stocks. Some people just play rebound plays where they look for stocks that get um, beat down by the market unjustly, and then they try to predict whether the stock's going to recover. People do a mixture. It all takes time to figure out what you resonate with, but I found that the more and more I learn, the more and more I know what I like, and I know how I like investing. And then it makes it easier for me to find stocks and make decisions because I know exactly what I'm looking for. Um, yeah, once you figure out how to learn about stocks for yourself, then just immerse yourself in that every day. I know that for me, I learned a lot through watching live streams of traders and investors and listening to podcasts with different investors. I definitely like the mindset side of things, and I like hearing about how people think about the stock market and how people have constructed their investing philosophy. And I kind of learned through osmosis mostly. I did read a fair amount of books and I learned a decent amount on Twitter. But yeah, mostly podcasts and YouTube for me. But maybe you're the type that learns better from books or from articles or blogs, and that's how you're going to kind of build the framework you use to think about the markets. And yeah, I would just say once you figure that out, just stick with it every morning. So what I do is 6:30 till the markets where I live open at 6:30. From 6:30 till 8:30, I'll just study the markets 2 hours each day. And if you do that for a year, it's pretty amazing how um, much more you'll know. You can learn quite quickly. And then also, what I found very helpful was being exposed to all sorts of different philosophies from the beginning, hearing from the straight up value investors, hearing from the growth stock guys, the traders, the options traders. And yeah, it's everyone has everyone has a unique perspective and you can learn from anyone. Okay. The final thing is once you have a pretty good group of these online mentors or people that you're learning from on the internet, it's tempting to just copy them. And I've definitely in the beginning copied some plays simply because someone I respected was buying it. But I've realized that you essentially have to learn how to do your own due diligence. And it takes a while to learn exactly what to do to research a stock. Like you don't even know where to start in the beginning. What I've noticed though is everyone has their own method for building conviction in a stock. Um, I'll share with you mine just to get you started, and you might be able to, um, either use it or build your own. And so, okay, here's my method. First, a mentor pretty much points me in the right direction. Sorry, it's usually that a mentor or a blog or an article or a YouTube video will mention a stock that kind of piques my interest and that I find interesting. Um, if it's a type of stock I like, I've been really loving the high growth stocks. Um, I'll start digging into it more. If I decide I want to buy a position, that is like sometimes you hear about a great stock, but you would just rather buy another stock that you already own because you're more familiar with it, you think it's at a good price. And so there also comes uh, a time where you're looking for new positions compared to just building out your other positions. So once I hear about the stock, I'll try to go to the original sources or primary sources. So that's the quarterly reports, S1 filings. I look at their financials using a website called Hypercharts. Definitely check them out. They're badass. Um, and then I'll try my best to form my own opinion about the stock and whether I think it's an interesting, awesome company. Once I form my own opinion, then I'll start doing a bull bear review where I'll start looking at all the bull cases for the stock and all the bear cases. Um, After you look at like 5 bull cases and 5 bear cases, you realize there's often only 1 or 2 talking points that people address when criticizing or praising a stock. And you quite quickly realize like a lot of these points are kind of stupid compared to the other side, it seems like, where maybe the bulls have a much more sophisticated outlook on why they think the stock's gonna go up and that the company's gonna succeed in the long term, and their rationale is just stronger. And then you listen to the bears and you go, oh well, you're not considering X, Y, and Z. The bulls have addressed these points quite thoroughly, and you're probably a bear just because you're short the stock or you're biased or you don't like the industry, etc. The same goes the other way. Sometimes the bulls are blind and the bears are seemingly more objective. But I think that when you do a bull bear review, you get a pretty good sense of the state of the company. Um, then what I do is I'll start a small position and I'll slowly build it. Most of the time. Sometimes I think the opportunity is so good, I'll go heavy right off the bat and then build in smaller if the stock drops a little bit. But for the most part, I'll start small and I'll think about the fact that I'm going to hold this position for 10 years. And so building the position over a few months, if it's going to be a successful long term company, is really no big deal in the grand scheme of things.